Hi, this is Alex Wagner of Alicart Invest, and I'm here to report on prices for buy-to-let investments in Paris over perspectives for 2014 and beyond. Now, a price is always constituted by an equilibrium between upward and downward market forces. Now, what we have at the moment in terms of downward market forces are possible interest rate hikes coming. We have possible fiscal reform coming, and we have a possible extension of the Eurozone economic crisis. Now, on the other hand, we've got some upward market forces that are actually opposite facets of these very same factors. For example, if we take interest rates, well, interest rates are at a record low right now. You can negotiate a bank loan for real estate at below 3% at the moment, and that's a historical low. In terms of fiscal reform, well, there's actually a special regime at the moment for capital gains in France, and that's valid until the 31st of August 2014 with some special cutbacks. And in terms of the Eurozone crisis, well, that's actually a positive market force because real estate is a refuge value, and certainly a lot of people have been stung by doing more risky investment during the economic crisis and are now certainly going towards safer bets. Now, in addition to that, we've got an influx of new buyers who are coming from outside of the Eurozone. I'm talking about the Chinese, the Russian, the Brazilians, the Middle Eastern people, and these clients tend to go for apartments worth over €1 million, although that said, there is a tumble-down effect onto lower priced properties, as traditional 1 million plus buyers have to seek slightly more affordable properties. There's also Australian clients who, thanks to good exchange rates with the euro right now, are coming back en force. And British buyers also are interested in Paris right now because they're looking for somewhere to park their pensions in a secure environment. Now, what about official prices in Paris? Well, the Chamber of Notaries has published a special report, which you can find the link to that special report in the written version of this presentation. And according to the notaries, there was a small dip in prices last year. We're talking about minus 1.3% in Paris. And according to the notaries still, there are three factors that will probably influence French prices in 2014. There's the availability of real estate credits, loans. See, if loans are easier to obtain, then that's going to boost prices. There are the droits de mutation, the notary fees, which are actually a government tax on transactions, which are going up in France. But that said, Paris has chosen, because these are region by region basis, has chosen not to apply these, so Paris is not concerned by this rise in stamp duty. Now, we mentioned before the third factor is the special regime at the moment for capital gain tax, and that's valid until 31st of August 2014, and that's helping maintain prices a little bit. Perhaps more conclusive is the advanced indicator published by the Chamber of Notaries. You see, a notary who sees a transaction, who sees the compromis de vente signed yesterday, will only actually see the actual transaction in 2 to 3 months. So they have foresight on the prices, and this foresight gives a small uptick in prices in the first trimester of 2014. Again, you can download this report on the link which is in the written version of this presentation. Now, that's for the Paris market as a whole, and indeed the French market. Now, there are disparities that are increasing within this. For example, between Paris and Provence, there's always been a disparity, but it's getting bigger because although Paris dipped by 1.3% last year, there was actually a considerably greater dip in the rest of France. So that is a real signal of solidity for investment in Paris. Now, on a district by district basis, well, each arrondissement is different, and in the third trimester of last year, Paris as a whole gains 0.5%, but if you consider Saint-Germain-des-Prés, which is the most expensive district, that gained 4.9%. So you see there's a big difference there. Another big difference is the type of apartment. The big, now when I say big, this is by French standards, by Paris standards. So when I say big family apartments, this is 150 square meters and beyond. They're having trouble finding buyers. Prices are having trouble maintaining themselves. Transaction conclusions are taking longer. This is because these big apartments don't correspond so well to the modern needs. Whereas on the other hand, compact apartments, studios, 1 bedrooms, 2 bedrooms, and the sizes are for a studio 25, maybe 30 square meters, for a 1 bedroom 35 to 45 square meters, for a 2 bedroom 55 to 70 square meters, in the neighbourhoods that we're going to examine now, just a little bit later on. These are very popular. Prices are maintaining themselves. The apartments sell quickly because there's no wasted space. They're optimized in terms of floor plan. Another consideration is whether an apartment has faults or not. It used to be the case just a few years ago that apartments with faults would sell at sky-high prices and very quickly. The party's over today for apartments with faults, and that's not the case. Those apartments are negotiated down and they take longer to sell. Now there's an opportunity here for buy-to-let investors, because you can pick out an apartment that has a fault that will mean it'll be cheaper to buy, but a particular fault that will not sacrifice your rental revenue on the short-term market. So that means you can buy at a lower price but rent at the same price as a perfect apartment, so you get a higher yield, rental yield. Examples. You can't just have any old fault. For example, if an apartment is on the first floor, that's a good fault to have because you'll buy cheaper, but you won't rent any cheaper. You see, when you're a weekly tenant, it doesn't really matter if you're on the first floor or if you're on a higher floor with an elevator. So take advantage of that. Likewise, you don't need an especially light apartment. Just an averagely light one will be fine for a weekly stay. You can have common parts in the building that need refreshing. You can have an apartment that needs a lot of work, and I'm talking serious imagination to reveal the full potential, where you need to have professionals come and help you. So you see there are opportunities out there. Now in terms of volume, I've got good news, because it was terrible in about 2010 to 2012. We got the impression there was almost nothing for sale. It was a real bottleneck in the market. Now volumes are up. In the third trimester of 2013 compared to the same time previous year, 2012, volume has gone up 16%, and we can certainly feel that when we go looking for apartments. There's certainly not an overflow of supply, but there's enough supply for us to find investors' apartments. Now the general consensus on price in 2014 is that prices are going to have a gentle touchdown. What that means is the big double-digit gains, percentage gains of before, are probably behind us. And it also means that there's no particular reason to fear the bottom falling out of the market in a big crack, in a big crash. No one really believes that's going to happen. The FNIEM, in fact, which is the federation that regroups French real estate agents, is planning on a small dip in prices in France in 2014, a dip of 1 to 5%. And on the other hand, in Paris, they are planning on a positive rebound in prices of +3 to +8%. So that's in Paris. Now, that's for general prices in Paris. What we're going to do now is look at specific prices that A La Carte Invest sees on a day-to-day basis on the particular apartments and in the particular areas that interest investors for buy-to-let Paris homes. Now, for this I had a chat with Carol Duquet, who is our manager of buy-to-let projects in Paris. Now, Carol has her finger on the market pulse because she's out there looking through the adverts, contacting our real estate partners, going to visit apartments, making offers for our clients. So she knows what the score is. And what I'm going to tell you now, it concerns apartments of the kind that A La Carte Paris clients look for short-term rentals. So this is studios, 1 bedrooms, 2 bedrooms in the best areas of central Paris. If we start with the third arrondissement, the third district, now this was traditionally the kind of poor cousin of the heart of the Marais. That's not the case anymore. It's really caught up with the rest of the Marais. It's just a shade cheaper. It's a relatively affordable way of having a buy-to-let Paris home with a good yield. And prices in the third are from 11 to 12,500 euros per square metre. Now if we look at the heart of the Marais, the fourth district, this is really the village-like atmosphere that the a la carte clients love the most in Paris. And now this is more expensive. We're looking at 14,000 euros per square metre, but you will get a good return on your investment on that in terms of rental yields, so it's definitely worthwhile. One exception would be the Ile Saint-Louis. Prices there are over 20,000 per square metre, and we cannot rent apartments there sufficiently more expensive to justify that expense. So in terms of rental yield, we wouldn't recommend Ile Saint-Louis. Now moving on to the sixth, Saint-Germain. That is the most expensive area in Paris. Prices are between 15 and 20,000 euros per square metre. Difficult under those conditions of price to get a good yield. There are opportunities in certain entry-level streets. Now, given that entry-level streets in Saint-Germain are good streets, don't worry. And you can also get by if you manage to find something that needs a lot of work on it, a lot of investment, a lot of imagination more than anything to spot that the potential is there to be revealed. We've done some operations in the past like that which have had very good yields, so it is possible. On the whole though, you should probably look at the 7th arrondissement. Now this is the lively bit of the 7th, between the Eiffel Tower and Rue Claire shopping street via Rue Saint-Dominique, which is a commercial street. A lot of atmosphere there, village-like atmosphere. So you essentially get most of the advantages of the 6th of Saint-Germain-des-Prés, but at a more affordable price. We're talking 11,500 to 14,000 per square metre, compared to 15 to 20,000 for the 6th. So some very good opportunities there for getting good yield on buy-to-let homes. Now Paris remains firmly in the spotlight for affluent international investors. There are several reasons for this. First of all, there are credit controls that banks apply in France and in Paris when giving bank loans. And these credit controls are much more lax in other countries like the UK, for example, which is why there's much more speculation in London than there is in Paris. Now what this means is Paris is a fairly safe long-term market where you don't get these outright speculations going on, so it makes things more stable. Also, there's a scarcity, a fundamental scarcity in Paris that is twofold. Firstly, Paris is circumscribed by the Périphérique Ring Road, so there's not going to be any more of Paris. Not going to be any more building. Also, there's not going to be any more 100-year-old classic stone buildings, are there, by definition? So these scarcity factors mean that the demand tends to stay ahead of supply, and that's very good for residual values. Now, furthermore, Paris is investing heavily in urban renewal. Now, we've seen this in some big projects that are ongoing in Paris or just finished, like the new Place de la République, like the new quays, the Voies-sur-Berge, which are being on either side of the Seine converted to pedestrian use. There's the Halles, big central shopping complex being converted, quite spectacularly. And not forgetting the Grand Paris project that concerns the parts just outside Paris. So, just before concluding, I've got a quote by Yolande Barnes, who is head of Savills Residential Research. And what Yolande says is this: it seems likely that for wealthy, globally footloose investors, prime residential property in London and Paris will remain a favoured safe haven for wealth created in the New World economies. So we can definitely see a green light there for investment in Paris. Now, to conclude, in Paris we've got historically low interest rates. You can get a bank loan today for 2.5% in Paris on real estate. Prices have settled down to a reasonable level. They're not exploding anymore. We're talking about a gentle touchdown in prices, and that's quite a safe sensation. There is a possibility for negotiation today. You can negotiate down an apartment that has a defect by about 10% today. There are opportunities, and that certainly wasn't the case a couple of years ago. And there is some decent stock out there, so we can find quality apartments, and that also was very difficult a couple of years ago. So essentially it's a very good time to invest in Paris right now, because despite possible tax hikes, well, the realistic level of property prices in Paris compared to London, for example, where they're less realistic, I'd say, and also the quality of lifestyle in Paris, which is very rare and sought after for a capital city, are keeping Paris firmly in the spotlight for affluent international buyers. So that concludes this presentation of the outlook on property prices in Paris for 2014 and beyond. Don't forget to download the written version, because there you'll see all the references that I used and the sources that I used to come up with this information, as well as obviously our personal experience on the market operating for investors. So download that, and I'll see you soon with another report. Thanks.